GDP growth for the June quarter is more like 6.5 to 6.8%. Why? Listen on. GDP growth for the June quarter was seen last week at 7.8%, 130 basis points above market expectations. The numbers tell us that manufacturing and the finance, insurance, real estate segment were seen as the key drivers of GDP. What were the real drivers? We can break the GDP drivers into three: tariff related, statistical, and underlying inherent GDP strength. One can look at manufacturing growth and safely say that there was a lot of tariff related front loading in the numbers, meaning companies bringing forward their imports from India to try and avoid tariff related price rises. Number two, statistical reasons. Now, this was another factor that exaggerated the GDP growth number. How? One must remember here that GDP calculations are first made in nominal GDP terms, meaning it does not remove the impact of inflation. Once the impact of inflation is removed from these numbers, we get the real GDP numbers. The inflation in GDP, let's call it GDP inflation, is closely related to an average of WPI and CPI inflation. From March to June, one must remember that WPI inflation fell 200 basis points on average to 0.3%, and CPI fell on average 100 basis points. Now, this greatly reduced GDP inflation. Now, why does that matter? Let us explain this with a simple example. You earn 100 rupees. That is your nominal income. You experience inflation of 5 rupees. So your real income is 100 minus 5, so 95 rupees. Now assume inflation has dropped from 5 rupees to 1 rupee. Now this means your real income is not 95 now, it is 99 rupees now. Now this way, when GDP inflation contracted, real GDP has seen a bump up. Now remember, this exact same thing happened 2 years ago in June of 2023 when GDP inflation fell sharply. So when this very inflation normalizes, meaning picks up in the quarters ahead, this real GDP jump will also tend to normalize, meaning moderate. We now come to the third driver of GDP, inherent macro strength. Like seen in many short frequency indicators, India's inherent resilience continues, and one can see a part of this in the increase seen in the services GDP numbers beyond the boost it received from low inflation. So in short, if one were to normalize the effect of both low GDP inflation and the front loading of orders due to tariffs, one could safely say that India's GDP growth for the June quarter lies more in the range of 6.5 to 6.8%. Just still a strong number.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.